Okay, so good evening, everybody. And like I said, the year is drawing to a close. So this is the time of the year where we start thinking about how did we do this year as traders? Like, how was our performance? We're not thinking about money as much as we're thinking about performance. Like I've said over and over again, right? You get this thing right, and money is not far from you, right? You get this thing right, even if you've spent years trying to master trading and you spent years trying to understand trading and you spent years trying to make money from trading. You get it right, you will make money, right? So we need to think in terms of performance, which is why we do this meeting. We need to think in terms of performance. So I'm thinking, I've reflected. I'm like, okay, what are the five biggest trading mistakes I made this year? Right. Last year I got, into a mentorship, a different mentorship than this one. I got into a mentorship. I was able to, get some stability, get some consistency, and I traded an account to pay out last year. And then by the time I got to like I got my first payout maybe in October. And then from there, I'm like, okay, I did a 10K account, did a payout. Let's scale up. And that's what I was thinking. And then I was like, okay, let me see if I can do 50K. Right. So that was where I was trading. I actually traded well for the better part of the end of last year, but I ran into some issues. And some of them were my fault, some of them were just, you know, normal in the course of trading. So I think my first mistake that I would say I made was I was rushing to scale up. And rushing to scale up, not that, oh, because I passed a 10K, now I want to do a 50K. I don't think that in itself was the rushing. The rushing was that I had that 50K account, end of year. So a lot of prop firms begin to do some promos that look very juicy. And then I bought maybe another 50K account. Then at some point I bought a 100K account before the year ended last year. Right. So I had like some three, four accounts at the same time. My idea was, oh, I'll just pack these other accounts, right? I'll be trading one, and then when I'm able to maybe secure payout on that one, I'll move to the others or something. But eventually, I didn't stick to that plan, right? And so there was some impatience part. Whoever that is, please mute your mic. There was some impatience on my part, which um led me to, start trading multiple accounts at the same time. So I started copy trading, right? So maybe instead of taking one account, taking 1% risk on one account, you're now taking 1% risk on maybe like three, four, five accounts at the same time. And it's attractive. It's attractive because you and it's dangerous. You think as a trader, you think that once you have gotten it, then you have gotten it. So most of the time, that early stage of success in trading, that first stage of success in trading leads to a lot of arrogance. You don't yet know you're arrogant, but you're arrogant and you're ignorant at the same time, which is a deadly combination. So you feel like, oh more, it's time to scale up, to level up. But what I was failing to understand was the risk of ruin. And risk of ruin is like what is the distance between you and you having no funds to trade or no accounts to trade? So if I'm trading, let's assume I'm trading five accounts, right? And I claim I'm risking 1%. I'm talking about proper accounts now. And I claim I'm risking 1% per trade. Am I really risking 1% or I'm risking 5% if I'm risking 1% across five accounts? Of course, I'm risking 5%. It's not going to look like that if I am in profit or if, I'm scaling up. But when I'm in drawdown, it's going to be obvious to me that, oh, there's a problem here. And then I am also overloading myself, overloading my mind and my emotions with the burden of carrying a lot of risk. Right. So I was trading multiple accounts at the same time at some point, and that's kind of when I had a losing streak, right? I lost multiple accounts at the same time because I was trading multiple accounts. You get so that risk of ruin was too much. So, and you hear a lot of this as an advice in the prop firm influencer space, where a lot of people will say, "Oh, once you are profitable, once you're consistent, just start copy trading." Recently I started trading with Ghost Funded Trader, right? And one of their rules is that you cannot copy trade. You can't trade the same trade across different accounts. And I'm like, why is that? It's at first it was a major point of frustration for me. Then I realized that, oh, it's a rule that actually makes sense because you are exposing yourself to more risk than and the firm as well, if they are actually booking you. You're exposing them and yourself to more risk than you should be. You're trading several accounts at once. Right. So um that's one thing that I said, okay, I'm going to stop. I'm going to trade one account at a time or one trade per account, right? I'm not going to use the same trade across different accounts. If the accounts are the same size, or if they are serving the same purpose. Sometimes I have some accounts where, okay, I want to take the same trades, but generally I wouldn't put all my eggs in one basket when it comes to trading the same trade across different accounts. So one thing to remember is that fast is slow, slow is smooth, and smooth is fast. If you look on the right, you see a picture of the tortoise and the hare. I don't know if you guys remember this folklore of the tortoise and the hare where they're supposed to race. And because the hare was so confident that, I mean, I can dust this guy and finish this race in seconds, the hare just went about doing whatever, got distracted, and maybe in some versions of the story, the hare baby went to sleep and then woke up at the last second when the tortoise was crossing the finish line. So fast is actually slow, meaning that when you're trying to rush when it comes to trading, you end up setting yourself back even way beyond your starting line. And then you have to now push to come out of the not just financial, but sometimes emotional and mental drawdown that you are in, right? But slow is smooth. You grow slowly, you grow smoothly, you master what it means to trade a 5K account, even if you can afford 50K. You master what it means to trade a 20K account. You build your processes. I was telling one of us here the other day that look, it's better you're making some of these mistakes now that you're trying to trade a 5K account, a 2.5K account, a 10K account. It's better you make these mistakes now because you don't want to make these mistakes when maybe you're trading a 500K account or you're trading across different prop firms at the same time. Because there will come a time for that. There will come a time when not even like beyond the shadow of doubt that you are capable of maybe handling different accounts at the same time, and it makes sense for your risk profile. Right. So fast is slow, slow is smooth, and smooth is fast. So if you really want to go fast, you need to start by going slow. You go slow, you actually enjoy the process, enjoy the journey. And then you discover that in time you get to your destination, so to speak, quicker than if you are trying to rush in the first place. All right. So another thing that I made a mistake with was wrong prop firm choice. If you can see this screenshot, this is a firm that was called Day Funded, and these guys just came out of the blues. They said they had a discount. They were doing 50%. They were just opened and they said they were doing 50% off, right? And at that time, I was looking at 50K accounts, right? Because I'd already done like 10K. So I'm like, next level is 50K. And since they were doing 50 percent off, I bought 200K accounts with them. And this ended up being the first 100K account phase one that I would pass. I passed this, right? Okay, by the time it was time for phase two, I realized that, oh, these guys have started, they've rogged basically. They started, we have payout delays. You guys, don't worry, we have issues, but don't worry, it will be resolved, it will be resolved. And then, they just disappeared into thin air. So that was a really painful moment for me, especially because, and then I think from this I learned something, right? Any financial decision, any investment or financial decision that requires FOMO, that requires like, oh, cash in now. Otherwise, you might miss this opportunity, whether it's from you or whether it's internal or external pressure, internal or external pressure. Try your best to avoid it. Right. You should have a rule that, right, number one, you have a plan for your money, you have a plan for your funds, you have a plan for if you want to buy prop firms, you have a plan for how you want to go about those purchases. You have your budgets that you're setting aside. But aside that, even when you have funds, you can give yourself a buffer time. maybe a firm comes out with a discount that you want to take advantage of, right? Give yourself a buffer time before I key into this. Let me spend 24 hours sitting on it and see if I can still afford to make this kind of decision. That's something that can help. So this was a new firm. They didn't have a track record. They hadn't spent any time in the industry at all. And they were giving a very unrealistic discount. It wasn't 50% off for just a second or just a few weeks or a few days, rather. It was 50% off basically for everybody joining, right? And I ended up wasting a lot of time and effort, trading this account. I could have put this, if I had put this into another firm, even if it was a 50K account, I would have most likely gone on to, or possibly, let me say, gone on to pass phase two and made a withdrawal of that account. And I was following a recommendation of people that had less to lose than I did. And what I mean is, if you have somebody who is funded 1 point something million, is making consistent six-figure withdrawals, five-figure withdrawals, and then they are recommending something that is high risk to you, right? You need to consider that your risk profile is not the same as the other person's risk profile, right? So even within our community, for instance, I can recommend something to you and it doesn't suit you, right? Some people can recommend some things to you and it doesn't suit you. You have to know, you have to be able to judge the advice that you're getting from people as regards to yourself and your own situation. Someone is telling you that, oh, they want to trade with $100 and they're only going to risk, you know, $10 per trade or maybe $20 per trade. And you think that you have to measure up and match up and also deposit $100, even though that's all your savings. That doesn't make any sense, right? So it's important to weigh the advice of people, to weigh the recommendations of people, and judge from your own situation. Say, guy, if this thing no payout, if this risk no payout for me, what's the downside? The downside for somebody else spending $100 might not be much. The downside for you can be crazy. So maybe instead of spending $100, maybe you want to do 20, you want to do 30. Walk at your own pace, right? Walk at your own pace. I think another thing, not I think, another thing that I experienced was that I did not follow a rule on one of the accounts that I traded. This was a 5K account with Maven, and I've spent months trading this account alongside trading others. I've spent months trading this particular account, and phase two, the second to the last trade, right? I was just so impatient for that trade to hit TP. And I ended up stacking some very, very, very minimal lot size positions. It was the second to the last trade or the last trade. I ended up stacking some very, very minimal lot size positions, like maybe like 0.01, 0.2 or something like. And now their rule is that you can't open more than four positions. You can't open, who is that? Please mute. You can't open more than four positions when you're in drawdown on a trade, right? So if, for example, I had only opened four positions, I would have been fine. But because I just opened one extra position of 0.01 lot size, if I remember correctly, right? I I went on to pass the account, but by then they reviewed it, they said you broke this rule, and I didn't get funded, right? It was very frustrating, but because it was 5K, I was able to just shrug it off. And I was also able to say, okay, at least I've built some more confidence in my ability to do this thing. But this was something that I should never have experienced if I had just stuck to the rule and if I had known the rule. So the most important thing, like I always say, you take ultimate accountability when it comes to trading. There's no reason why you should not know the rules of a place where you have invested money in. There's no reason why you should not know how their system works, know where your risks are, and manage those risks accordingly. Um, so yeah, I had a moment maybe middle of the year where I was trading under serious emotional and financial pressure. Uh, I had just gotten a diagnosis and I was going to need yeah, I would say I was going to need 2 million naira for a surgery out of the blues, as it seems, right? And that was it was crazy. There was an opportunity I was looking at. By the time I got home, I was like, okay, I'm going to enter into this trade. Use your mic, sorry. I was going to get into this trade. Uh, then I got into the trade instead of me to take my profit when I was supposed to take profit and where I was supposed to take profit. I was up about 7 hour on 100K evaluation where I was already severely down. So that's another compounding element. So I didn't feel like that was enough. I kept on like waiting for it to go up more. And I ended up maybe either breaking even on that trade or losing on that trade. Ultimately, I lost the account, but the lesson I came out with was that if there's something that's putting me under pressure, whether it's financially, whether it's emotional, whether it's, a conversation with my wife that doesn't go well, or it's a conversation with another family member, or there's something that's frustrating me, or someone that's annoying me, or I feel like, wow, how do I get to pay the moment I start thinking, how do I get to pay my next bill that is due? Or how do I get money for this? I know that it's time to step away from the charts and calm my mind, right? Because trading and pressure don't go well. The only kind of pressure you need to put on yourself is pressure to perform your process properly. All right, so solutions for all of these issues, right? You want to adopt a long-term perspective, a long-term horizon. You want to scale up very slowly and methodically. Like I've said, if you can do 5K, you can do 10K, right? If you can do 10, right, you can do 50. If you can do 50, you can do 100. If you're talking prop firm, right? Let's assume it's personal capital. If you can trade $100, then you can trade $1,000, right? If you can trade 1,000, you can trade 10,000. If you can trade 10,000, you can trade 100,000. All it is that you need to master the process properly, right? So think about it from a long-term perspective. I have years to do this thing. I have years to get this thing right. I don't need to make all the money in the world this year or next year, right? And you also think about that when you're setting your goals as well. If my goal is, oh, I want to be at least 1 million in funding, right? I don't need to set that goal for a year. Yes, it could happen within a year, but I'm not a failure if I set it and in a year I haven't achieved it. No, because long term, I can still achieve this goal, right? Number two, don't go for the highest account you can afford, right? Aim a bit lower. So ideally, like I always say, try and start from the lowest account you can afford. Prove your profitability there, right? At the very least, pass one phase on a very cheap account. At the very least, prove that you are able to take an account to grow an account over time, and then you can go higher. Number three, go for reliable prop firms and brokers with good trading conditions. Number four, take ultimate responsibility, right? You need to know the rules of the prop firm that you're trading very well. And number five, don't trade under pressure, or at the very least, be very aware of what's going on and then focus on your plan. For example, I realized sometime during the year that when I'm out, right, and I'm trying to trade on my phone or check trades on my phone, I usually perform badly. Like it can be a very good trade. There was one that I think myself and Isaac were, we're doing bands on the group, like, this trade, this trade. It can be a very, very, very good trade, good setup. And I will just psych myself out of it and be like, okay, I'm closing early. And it goes on to do numbers. Or it can be a very, very terrible trade. And I just, for some reason, I just FOMO into it. Right. So it's good to be very, very self-aware, know exactly what's happening. And whenever you are aware that, oh, it looks like I'm not following my plan, go back to your written trading plan and make it a note to follow it conscientiously. You want to pay attention to it.